A life-changing opportunity is coming. We're on the brink of a recession like no other. Goods and services are at all-time highs. We're teetering towards double-digit inflation, and the reckoning of a global conflict remains in the balance. We've already experienced big drops in the market, but is the worst yet to come? Sadly, many of you are going to struggle with the increased living expenses, reduced earning opportunities, and a market collapse. But fortunately, if you watched my last video, you'll have learned how to put more cash in your pocket in 5 simple steps so you can navigate those choppy waters. And by the end of this video, you're going to learn how to invest in these 4 lucrative assets so you can fully capitalize on what could be a life-changing opportunity. Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." So remember, the more disastrous the media make out our circumstances to be, the more opportunity awaits. So let's reveal the first one, which just happens to be the granddaddy of all assets: cash. Keeping all your money in cash isn't the best way to get rich over the long term, but I'm going to let you into a little secret. It's the one asset class that the financially aware prioritizes in the build-up to a recession. Why is that? Purchasing power. At the start of 2022, Warren Buffett held over 20% of his company's value in cash. He was criticized by some for not optimizing his returns, but Uncle Warren knows what he's doing. In Q1, he deployed over $50 billion into stocks, leaving around $100 billion left over. That's billion. Be more like Buffett. Stockpile your cash in advance to improve your purchasing power when the inevitable crash arrives. If you have at least 10% of your net worth in cash, you should be in a good position. If you need more money, check out my previous video where I walk you through 5 simple steps. Our second lucrative asset is the stock market. Not financial advice. It's accessible to everyone, and you don't need much to get started. A recession occurs every decade on average, so expect them and prepare for them. Do you know what follows a recession? Expansion. In the stock market, the average recession lasts 18 months. The average expansion lasts 39 months. Let's take a closer look at 3 significant crashes in the US within the last 20 years and see how they played out. During the dot-com bubble in 2000, the market dropped 49% over 18 months. Over the next 5 years, it increased 98% from the bottom. During the Great Financial Crisis in 2007, it dropped 58% over 17 months. It then went on a record-breaking rally of 11 years, increasing by 408%. And the recent pandemic saw a sharp drop of 33% in 33 days, only to see it bounce back again over 111% the following 21 months. So, despite seeing drops of 30 to 60%, all of the prices recovered. They surpassed their previous highs and rallied for a much longer duration. Now, there's a super simple but overlooked reason to why the returns look so impressive. So if you paid $100 for a stock and it dropped all the way down to $50, what percentage drop would you experience? 50%? That's right. So what if you bought that stock at $50 and it went all the way back up to $100? What percentage increase would you experience? Low battery? Close? There's 100%. The rich invest for the long term, and they'll wait patiently for markets to recover to new highs. But that's not the only thing they do to become wealthy in a stock market. Here are some simple strategies you can use to make the most of market downturns. Don't sell. Only invest money you don't need for at least 10 years. If you invest for the long term, the only thing you need is patience. And more money. Expansions follow recessions and prices recover in time. Don't try to be clever and sell now to buy back in at the bottom. Time in the market is a fool's game. Dollar cost averaging. This is a strategy where you invest the same amount of money at regular intervals, regardless of the price or media speculation. Successful investing is all about psychology, and DCA removes emotion from decision making. Pay yourself first. Set up a monthly direct debit to invest as soon as you get paid. If the price continues to drop for 18 months, take comfort in the fact that you're buying more shares at a lower price. You'll then reap the reward when the market recovers. Here's a clever way to capitalize even further. Double down DCA. This is a more advanced strategy, but take DCA to the next level by increasing your contributions as the market falls. Continue your monthly contributions as normal and put more on top for each drop. In this example, I've increased my contributions by 25% for each 10% drop in price. As the price continues to drop over time, I buy more and more shares by increasing my contributions. If the price dropped 50% in 6 months, I'd contribute 205% more than when I started. That's $500 versus $1,525. But I'm buying 510% more shares at a lower price. That's 5 shares versus 30.5. This method involves more money and planning, but it's far more lucrative. Create your own rules for how much your contributions will increase for each percentage drop in price. For example, for every 10 to 25% drop in price, you could increase your contributions by 10 to 25%. The actual rules that you create matter less than your execution of them. Speaking of execution, it's time to practice my one-waving and reveal the safest and best returning asset in the game. Wish me luck. RECESSION! It's property. Having more money gives you more options, but there are plenty of free or very low cost opportunities out there if you're willing to put the effort in. Are you? Let's put that to the test. The like button is free. Granted, it takes time, effort, and courage. But if you put in the work, it makes a really big impact. Have you got what it takes? Add value to your home. Are there any basic improvements you can make to your home? Can you increase the floor space or improve the kitchen, bathrooms, or living areas? New carpets and paint alone go a long way. Increasing your home's value is a really easy way to get started. Any gains you make through refinancing or selling are tax-free and can be recycled. Rent unused space. If you're fortunate enough to have some extra space or even some extra land, could you turn that into a cash flowing opportunity? In the UK, you can make up to $7,500 a year tax-free for renting out a spare room or part of your home. A couple on my property course turned a section of their family's land into a beautiful wedding venue, which is now their main business. Could you buy or build a tiny home or cabin to rent out? Or could you create space for a mini campsite? Could you rent outdoor space or car parking spots for cash? Or could you create a low-cost self-storage business? Rent to rent. Find retiring or unmotivated landlords and offer them a guaranteed rent for a fixed duration in exchange for allowing you to manage the property. They get slightly less rent overall, but that's offset by the guaranteed rent by you and not having to deal with tenants. If it's in a good location, you can rent out the rooms on Airbnb or as a house in multiple occupation, otherwise known as a HMO, and pocket the profit. Rent to rent requires a lot of work, but the startup costs are low and the returns are awesome. Smelly houses. My first property mentor, Simon Zucci, said to look for smelly houses. The smellier, the better. Oh my God, what died in there? I'll take it. Why? Most buyers are put off by smelly houses. In many cases, all you need are new carpets, a lick of paint, and a deep clean. Maybe a little bit more with that one. One of the best returning low-cost investments that most people are unaware of is planning gains. Does your home or prospective property have space at the side or the back? Speak to a local planning officer and architect to see how viable it is to build. Could you gain planning permission on the space and split the ownership of the land, otherwise known as a title split? You can sell the land with planning on it to a developer or build on it yourself. Here's a hard truth that people don't like to hear. Knowledge and money are not acceptable excuses for holding back. They can be acquired by you, or they can be provided by someone else. Save up and learn, or go to a local property investing network evening and share your ideas. Can someone loan you the money or help you and split the profits? Get out there and speak to people. You might be surprised at how open people are to making money. There are so many people leaving hundreds of thousands of pounds on the table for not maximising planning gains.
If you fancy a flutter and like to play on the wild side of life, you might be interested in the fourth and final asset.
You don't need much money to start. It's relatively easy to do, but it's by far the riskiest of them all, and that's crypto. Crypto is highly volatile. It lacks security, regulation, and tax advantages. You've got to be really careful. Recently, two giant crypto platforms, Celsius and Voyager, filed for bankruptcy protection. There could be more to follow. They suspended account withdrawals, and now investors are unsure what's going on with their funds. They might lose the lot. So, why would I suggest such a risky investment? The crypto markets have already experienced a huge crash. Personally, I think the worst is yet to come, but if you're ready, there could be a huge opportunity. Now, I only invest in crypto if it meets these three basic rules. Number one, I understand what it is, and I never invest blindly. Number two, I only invest money I'm prepared to never see again. Celsius and Voyager prove why that's important. Number three, I have no more than 5% of my total net worth in crypto. If I lose the lot, I can live with 5% less. If it meets all three of those rules, I'm comfortable buying it. At the time of filming, Bitcoin is currently priced around $21,000. It was at an all-time high of $69,000 in November 21. If, and it's a big if, it returns to its all-time high of $69,000, that'll be an increase of 222%. Ethereum is trading at just under $1,500. Its all-time high was just under $4,900, also in November. If it returns to its all-time high of where it was back in November, that'll be an increase of 227%. Now, they're big potential gains that I'm willing to risk a small amount of money on. So, if you understand and believe in the projects, and you're prepared to see them go to zero, and you have no more than 5% of your total net worth in crypto, now might be a great time to start investing. If you do, you can use the same DCA or double down approach that I showed you in stocks. Just don't be greedy and don't be foolish. Recessions are an inevitable part of the economic cycle, and so are expansions. You can dramatically increase your wealth during an expansion if you invest during the downturn. The key to victory is in the preparation. There's still an investment that has the potential to return more than all four of these assets combined. That's why you should watch this video next, because it will show you how to discover the perfect business idea for me. And if you follow the same steps, I might reveal yours. Go on then. Oh, like and subscribe and all that stuff.